Well, we have an interesting assortment of Zacks rank 1 and 2 stocks on the top pick list this week. Mr. Matris, since you favored us with your appearance, we're going to start with you.
Mine is Harman International, ticker HAR, and they do premium audio equipment. You see them all over the place.
So they're an equipment maker.
Yeah, high-end audio stuff. So you see them in cars. As a matter of fact, they're in almost all of the luxury automobiles. And they sell brands like JBL, Cardin, Lexicon, Infinity, this kind of stuff. Okay. But they also sell to the personal consumer. They also sell to the professional market as well. But if you take a look at Harman, there's really a lot to like. So first off, they are a Zacks ranked number 2 buy, so that is what put them on my radar screen in the first place. But when you dig into their numbers, there's even more to love. They have a projected growth rate of over 30% for each of the next 2 years. Their trailing 12-month sales is at record highs. Their valuations are very attractive. They have a PE ratio of 22. They have a price-to-sales ratio of 1.3, and they have a PEG ratio of 0.98. So this is both a growth play and a value play. But the reason why I got so excited about Harman is if you take a look at their backlog, they have a record backlog of $20 billion. A lot of that backlog is on high-margin products. That's about 4.5 years worth of a backlog. The last time I saw such a huge stretched-out backlog was with Boeing, and Boeing proceeded to more than double in price.
The backlog of orders?
Backlog of orders, awards, and all that stuff. So this shows great confidence from the companies that are ordering these products. And I think it shines well on Harman because it shows that they have stellar quality equipment. Price-wise, I see them going to $100 over the very short term. $100, that would equate to a 12% return. I think that'll probably happen within anywhere from a couple of weeks to a couple of months. I'm that bullish on it. Over the long term, I'm talking about over the course of the rest of the year, I see them getting to the highs that they used to trade at back in 2004. That's $133. That would represent a 47% return. Now, the rubber's going to hit the road tomorrow because they are reporting earnings before the open. So we're going to see if this story holds up. But I think they are poised for some fantastic growth. They have positively surprised numerous times in the past. I think they do it again tomorrow.
So tomorrow will be what, January 30th, right? As we sit here and talk a day ahead of time. All right, Todd, you've got the Bank of Kentucky.
Yeah, BKYF is the ticker symbol. Small cap bank. They operate 32 branches in northern Kentucky. Market cap of just $275 million. So they're a little guy. But if you look, small cap banks in general have been performing pretty well. You see a steepening yield curve that helps net interest margins, but also credit quality has been improving. And in a lot of banks, especially Bank of Kentucky, non-interest income has been improving as they get higher service charges on deposits. And the company actually delivered a very solid beat back on January 16th, and that was driven by, like I said, solid improvement in credit quality and strong non-interest income. And you saw analysts raise their estimates significantly higher for both 2014 and 2015. So they expect that to follow through over the next couple years. Sent it to a Zacks rank of 1, which is a strong buy rating. So very good earnings momentum going on here. Valuation's pretty reasonable. They traded just 13 times forward earnings. The industry median is 14 times, so it's a small discount to that. And along with that, you get a nice little 2% dividend yield, so a little income to go along with the growth and the value. Could be solid total return potential over the next 6 to 12 months here.
Okay, Tracy, Norfolk Southern.
Yes, I'm a big fan of the rails. These guys already reported. Most of the rails have now reported, so we've heard from a bunch of them. The reason I like Norfolk Southern is they're on the eastern part of the United States, so they're in all the big major port areas and big metropolitan areas. Coal has been an issue with all the rails. It's really hit their bottom line the last year and a half. But the declines in the coal volumes are now starting to decrease. So it's not as bad. Coal volumes in the fourth quarter were down 2%, but they were down double digits the quarter before that. So we're seeing a stabilization with coal. But the other areas that they're shipping in have really jumped. Chemicals were up 21% in the quarter. Autos are still really hot. That was up 10. Agriculture had a really good quarter. That was up 9. And then you're seeing some of the effects of the housing recovery take place because materials and construction were also up double digits for them. So
I'm taking notes, don't mind.
yeah, I mean, the rails, they're also shipping a lot of crude on the rails now. That's also boosting their volumes. Volumes were up 8%. So I like the story. And as the economy recovers, the rails, that's where it's going to be. They're Zacks ranked number 2. They're among the highest of the ranks of the rails right now. They also just raised their dividends, so they're yielding 2.4, which is pretty good for the rail side. And valuations are good, trading around 13 times. Going to see about 10% earnings growth this year. So it's a good story if you're looking in the rail group. Pick the best ones, and Norfolk Southern is among the best.
Okay, yeah, rails are always a barometer of economic activity.
Yes,
right?
exactly.
And I heard another one just the other day, the increased hiring of truck drivers. Can you imagine that?
Oh, that's a good sign too.
Shipping,
Yeah.
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 All right, thank you all for that. Don't forget, we have other stock picks and stock picking strategies for your review. You can do that when you go over to Zacks.com, our website, if you're not there already. With everyone here, I'm Terry Ruffalo.